Welcome to lecture 13 of business taxation. In this video we are going to understand income from property concept. For last 3 lectures we are discussing this topic of income from property, and this is our last lecture on this specific topic. We would discuss different tax slabs. What are different tax slabs that are there for income from property for an individual. This video would specifically be regarding property income for individual. Previously we were discussing companies, corporation property income, and there were certain deductions allowed for corporations, but in this video we would see property income for individuals. So there are no deductions that are allowed for an individual in case of property income. So these are different slabs that are there. As we saw in case of salary, we had different slabs, and nowadays the minimum salary that is taxable is above 6 lakh rupees. So till 6 lakh rupees, if it is income from salary, remember that would be considered as 50% of our total income coming from salary. So in case of rental income, if it is less than 2 lakh rupees per year, then there would be no taxes. But if it is greater than 2 lakh rupees but less than 6 lakh rupees, so the taxation, remember the taxation that we follow is progressive taxation. So it increases, the percentage increases with the increase in income. So if our rental income is greater than 2 lakh rupees but less than 6 lakh rupees, we would have to pay taxes on the amount that is greater than 2 lakh rupees. Remember, 2 lakh rupees is exempted, so we won't have to pay any amount on 2 lakh rupees. So any amount greater than 2 lakh would be taxed at 5%. So let's just say if someone's rental income is 3 lakh rupees per year, then they wouldn't have to pay tax on this 3 lakh rupees. Rather, because 2 lakh is exempted, so we would deduct 2 lakh rupees out of this total rental income. We are left with 1 lakh rupees. So we would have to pay taxes on this 1 lakh rupees, and that would be 5%. So 5% of amount exceeding from 2 lakh, this would become 5,000 rupees. Okay. So there are other slabs, and they go in the same pattern. If the rental income increases is greater than 6 lakh rupees but is less than 10 lakh rupees, then there would be 20,000 rupees plus any amount exceeding than 6 lakh rupees. So let me do this one, and the next one would be similar to this. Let's just say someone's income is 7 lakh rupees. So it is higher than 60,000 rupees and less than 10 lakh rupees. So we know it would fall in this specific slab. So the tax would be 20,000 rupees plus the amount exceeding 7 lakh rupees. So the amount exceeding 7 lakh rupees, the amount higher than 7 lakh rupees is 1 lakh. If it was 8 lakh rupees, our rental income, yearly rental income was 8 lakh rupees, then the amount exceeding 6 lakh rupees would have been 2 lakh. But in this case, it's 1 lakh. So 10% of this 1 lakh. So that would be 20,000 plus 10,000. So our yearly tax on property income would be 30,000 in this case. So the other tax slabs are also in similar pattern, right? So these are other tax slabs. Okay, so let's have an example. Mr. Khan owns a property which he has rented out at 10,000 rupees per month. The local authority has determined the rental value of property as 1,44,000. He has no other income, so we need to calculate his income from property. So tax on income from property. This is what we need to calculate. But remember, the first rule that we discussed is that when we started this chapter was irrespective of what rent we are paying, if the tax authority have calculated certain rent that they think is the fair market value, remember we discussed the idea of fair market value, and we said if actual rent is greater than fair market value, then our rent would be actual rent. But in second case, if actual rent is less than fair rent, then we would consider fair rent as our rent. So in this case, the actual rent is 10,000 per month, so that would be 10,000 for 12 months. It would be 1,20,000 rupees. This is the actual rent that we are that Mr. Khan is receiving. But the tax authority thinks that the rent should be 1,44,000. So this is what we would consider as rent rather than this, because some people, to evade taxes, to save taxes, what they can do is they can say that we are receiving a lesser rent, but actually they might have been receiving a higher rent. So for that, tax authorities use a fair rent procedure. So here the rental income of Mr. Khan would become 1,44,000. This would be the rental income of Mr. Khan. So how much should the tax be? Remember, we said that if it is less than 2 lakh rupees, we would have not to pay any taxes. So in this case, we do not need to, Mr. Khan do not need to pay any taxes. He is exempted from taxes. This is just the case for an individual. It isn't the case for the corporations. For corporations, there is no tax slabs. The tax is there is a fixed tax percentage. Okay, let's have a second example. Now let's merge the salary and income. Let's just say a person is also doing a job and he is receiving income from property. Then what would be the case? So his basic salary is 7,20,000, utility allowance, then bonus, then we have traveling allowance, gross rent from property. Remember, this is exempted. Property tax paid. And now property tax paid, although this tax is paid, but there is no deduction in case of an individual. Again, collection charges in corporation it is allowed, but in case of individual there is no deduction that is allowed. Okay, so let's solve this example. For now, ignore this this part of the slide. We would come back to this later on. Let's start with the basic salary. So the basic salary is 7,20,000. Bonus, that is 32,000. Then we have utility allowance, and that utility allowance is 72,000. The rest of the amount is either exempted or they are not allowed as deduction. Traveling allowance is exempted. So income from salary is 8,24,000 rupees. This would be taxed as income from salary. So this would be taxed as different slab. as separate block, and income from property would be taxed as a separate block. They wouldn't be combined and then taxed, right? So we would first have to calculate income from salary, tax on this income from salary. Now it is 8,24,000. So if you can go back to lecture where we have discussed the income slab on salary, you would see this specific slab which says that if it is greater than 6 lakh but less than 12 lakh, then 5% of the amount exceeding 6 lakh rupees. So the tax would be tax on salary would be the amount exceeding 6 lakh rupees is 1,24,000. This 5% of this amount, and this would be okay, so this would be 6,000. 6,200. This is tax from salary. Then we come towards the second block, which is income from property. So the income from property is 4,80,000. You can go back to first slide and see which slab it would fall. It would fall in the slab where 2 lakh is exempted, and we would have to pay taxes on the excess amount, which is 2,80,000, and the amount would be 5% of this 2,80,000. This would be 14,000 rupees. So the tax would be 14,000, right? Sorry, let me write it over here. 14,000. So the total tax that include property tax and the tax on salary would be 14,000 plus this 6,200 that we are paying for the tax as income from salary. This would be 20,200 rupees. This is the tax that this specific individual would have to pay. Okay, then the last topic is regarding the options. Any individual or association of person whose income from property is above 40 lakh rupees or 4 million can opt for rate applicable of other income of individual and association of person and will be allowed deduction. So what this means is, first thing you need to remember that this specific option is only for individual or association of person. So normally we are talking about individual. This is not allowed for corporation. So not allowed for corporation. Now what this rule says is that if someone's income from property, rental income from property, it's just the income from property, not the income from salary or the combined income of salary and property, just the income from property, is above 4 million or 40 lakh rupees, then they have an option either to pay taxes as an individual, right? As we discussed in previous slides, it would be calculated as individual slabs, or they have an option that they can deduct the deductions that are allowed as corporations, and the tax slab would be for other income of individuals. So let me solve them, and this would only be clear when we actually go through this example. Okay, we have this example where Mr. Qasim owns a plaza and receives rental income of 6,50,000 rupees per month, and we have these details. Okay, so first thing, is Mr. Qasim allowed an option or not? This income is per month, so we have to calculate yearly income, and the yearly rental income is that is 78 lakh rupees or 7.8 million rupees. So now we know it is greater than 40 lakh rupees. So Mr. Qasim have an option. Now what do we mean by option? We will start with option 1. In option 1, the property income of Mr. Qasim is 7,80,000 rupees. There is no deduction allowed as an individual. And the tax slab Mr. Qasim falls in, let me go back. Mr. Qasim falls in this specific tax slab. It is greater than 60 lakh rupees but less than 80 lakh rupees. So Mr. Qasim would have to pay 1,10,000 and 30% of any amount exceeding 6 lakh rupees. So let me move back to that slide. Okay, so this would be, tax would be 1,10,000 plus the amount exceeding 60 lakh rupees is 18 lakh rupees, and the percentage would be 30%. So this would become 5,40,000. Sorry, 5,40,000. Last zero is there. Okay, this is this is 11 lakh and 10,000, right? 11 lakh and 10,000 plus 5 lakh 40,000 would become 16 lakh 50,000. This is the tax if Mr. Qasim follows option 1, that is if he thinks that he should be taxed as an individual. But let's just say if he wants that he should be taxed the other way around, the second option that he have, then what would happen? Let me add another slide over here. Okay, in second case, his property income is again 7,80,000, but we would less the deductions. In case of repair, remember 1/5 of the amount, this amount is allowed as deduction, that would be 15,60,000 rupees. This is the same rule that we have been doing for corporations, right? Then property tax that is paid was 10,80,000. Then collection charges should be less than 6%, right? In previous slide it is 1,50,000, so it is less than 6%. So the collection charges is 1,50,000. Once we deduct this amount, we get the total taxable amount becomes 50,10,000 rupees. This is total taxable amount. Now we need to calculate tax on this. In this case, the slab it would be followed would be the tax slab for unsalaried income. We will discuss these slabs later on, but for this specific example I have copied this slab over here. We haven't yet covered these slabs. The slab says that income exceeding 40 million but do not exceed 6 million, the amount would be 6,20,000 plus 30% of amount exceeding 4 million. So in this case it exceeds 4 million but do not exceed 6 million. So the amount tax would be 6,20,000. 6,20,000 plus 30% of the amount exceeding this amount, that would be 30% of this amount, 1,010,000 rupees. And 30% of 1,010,000 rupees would be equal to 3 lakh 3,000 rupees, and if we add them up we get 9,23,000 rupees. This would become the tax under second option, right? So the tax under first option was 16,50,000. Tax under second option is 9,20,000. What do you think Mr. Qasim would pay? He would obviously choose option 2, because there is an option under the tax rules, and under this option he would have to pay lesser taxes, that is 9,23,000. that is almost 50% of the amount that he would have to pay under the first option. So that's it. This is the end of the income from property chapter. In next lectures we would start a new chapter, which is capital and revenue received and capital and revenue expenditures.